the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. Well, Singapore shares inched higher as investors mull a slew of economic indicators out of China. So the Straits Times Index was up 0.14% at 4,114 points at about 12:58 p.m. Singapore time, and that is with a value turnover of some 566 million Sing dollars seen in the broader market. Now let's take you through the closing numbers. The STI ended in the green as well, up 0.26% at 4,119 points. In terms of value turnover, that's 1.36 billion Sing dollars. Now, gainers outnumbered losers, 370 versus 163. Top advances for today, we've got for you GMH USD, New Incorporation USD, and ST Engineering. And top decliners, we've got here Fuji Offset, Asus, and DBS. Now, in terms of counters to watch, we have BRC Asia, because the prefabricated steel reinforcement company secured around 570 million Sing dollars worth of contracts for the Changi Airport Terminal 5 project, where it will supply steel reinforcement for the substructure of the upcoming terminal. Now, elsewhere from China's economy expanding more than 5% in the second quarter of the year, to how Nvidia said it plans to resume sales of its H20 AI chip to China. We've got more international and corporate headlines in focus. And joining me on the line is Thilan Wickramasinghe, Head of Equity Research at Maybank Securities. Thilan, welcome to the show.
Thanks for having me back.
Great to have you. And Thilan, let's start with the U.S. this time around. I mean, U.S. President Donald Trump, he upped the ante this week, warning Russia's trading partners, China included, that he'll impose tariffs reaching 100% if Moscow fails to end its war on Ukraine within 50 days. How are markets reacting to all of these? Have they brushed his comments aside?
Yeah, I mean, I think the futures generally are advancing for the U.S. markets. I think the markets are discounting the fact that 50 days is not really 50 days under Trump, as we have seen with other tariff deadlines, which have all kind of got extensions. Of course, if these threats do bring about a ceasefire in Ukraine, that is a positive development, and that should put the markets further in the green. One area we did see some weakness is oil prices. Now, this could actually have some positive feed-throughs to lower inflation. And I think that's what the broader market is actually more concerned about. What will the U.S. inflation readings look like, especially as tariff effects get compounded right now? Plus, we're heading into U.S. earnings season as well. We think markets will be a lot more focused on trying to understand how much earnings are going to be impacted by all this tariff turmoil.
Okay, and in the meantime, though, Thilan, U.S. Treasury Secretary Scott Bessent, he is set to skip a G20 meeting of finance officials held in South Africa later this week. What does this really signal for global markets given the current narrative surrounding U.S. tariffs?
I think this is more of the same of what the U.S. has been doing in terms of their engagement with global multilateral institutions and forums, and also the rules-based global order. Look, I mean, U.S. officials have been skipping South Africa since earlier this year. Foreign Secretary Marco Rubio stayed away when South Africa actually assumed the G20 presidency as well. There's also this complication that 8 of the G20 members are actually BRIC members too. Remember, Trump actually threatened additional tariffs on these countries. Overall, we see this as a signal of the U.S. ceding some of that leadership of the rules-based order that they created. And as a result, I think some of the traditional groups like G20, excluding the U.S., and alternative groups like the BRICS, would actually lead to reshaping the global supply chains and trading partnerships going forward. And I think, what we're seeing is an acceleration of that.
And going back to the Singapore stock market as usual, Thilan, how did the STI fare today in relation to all that is going on in global markets? Any surprises when it comes down to the biggest movers, say China medical system? I understand shares of China Medical Systems surged 11% with its secondary listing on the SGX at one point today. What's driving the price movements?
Yeah, as you said, I think the STI ended in the green today, and we've seen a very strong sort of, a positive streak from the Singapore market so far this year. Now, if you look at some of the stocks that have actually done well, we saw SATS, which was a big mover, up about 4%. There was this big transfer of treasury shares today, so I think that accounted for quite a bit of the volume we saw there. We also saw Jardine Matheson, which also moved up about 4% after we saw some analyst upgrades on the street. Another stock that was in the green was actually ST Engineering, which is up about 2.2%. And likely from some of this news flow that, there is going to be a lot more spending in defense, particularly in Europe, after what Trump said last night. Now, on China Medical Systems in particular, we did see a similar price movement in their primary listing in Hong Kong as well. The stock was up about 7% in the morning. The company did announce that they received regulatory approval to initiate clinical trials on a dermatitis drug. But I also think the strong price movement we saw in Singapore highlights the renewed interest that we are seeing in the Singapore market itself, particularly given all the policy reform that is happening here.
Okay, and zooming in on some of the counters to watch as well, Thilan, we've got here BRC Asia, because BRC Asia, which is a prefab steel reinforcement company, by the way, it secured around 570 million Sing dollars worth of contracts for Changi Airport T5, where it will supply steel reinforcement for the substructure of the upcoming terminal. How significant is this for BRC Asia when we look at its share price movements? I believe it was up, it's up 4.2% at the close?
Yeah, I mean, it's a sizable deal, and it will take their order book to about $2 billion and also extend their revenue visibility all the way to 2029. So we like companies that have good revenue visibility. And Singapore itself is going through a construction boom like what we haven't seen in about 15 years, with many mega projects besides Changi Terminal 5. There's the Tuas Port, the integrated resorts are getting extensions and many more as well. And if you take year to April this year, total construction contracts awarded in Singapore is actually up about 54% year on year. So pretty big numbers. So we think this momentum will continue, and the larger contractors like BRC Asia will benefit from that, and I think that's what's being reflected in the share price. And I think it's also a positive outlook in terms of overall domestic construction as well.
And another counter to watch at Thilan is Fraser's Centrepoint Trust, because the manager of Fraser's Centrepoint Trust announced that the agreement between the trustee manager and property manager of retail mall North Point City South Wing has been automatically renewed for a further 12 months starting from Monday, which was, I believe, yesterday. What does this mean for Fraser's Centrepoint Trust, and how much of this has been priced in by investors already?
So the announcement relates to the renewal of a property management agreement with the existing property manager, which is Fraser's Property Retail Management. Now, we think the renewal of this agreement provides benefits in the form of continuity in the management of the mall, and the agreement is aligned and fairly consistent with other agreements across all their other retail malls and managed by the property manager. Obviously, this helps to ensure consistent application of performance standards and the best practices for FCT, plus having the same property manager manage North Point City South Wing and adjoining North Point City North Wing allows FCT and its unit holders to actually benefit from scale economies as well. So I think, I know the stock was down a little bit, but I think it's actually an incremental positive for the stock.
Okay, now if you're just tuning in, we're now in conversation with Thilan Wickramasinghe, Head of Equity Research at Maybank Securities. Well, Thilan, let's set our sights across the region. I mean, markets in Asia, they were mixed earlier today as positive Chinese economic data was offset by weak consumer spending. So if we go by official data out today, it showed the Chinese economy grew 5.2% between April and June, matching a prediction by an AFP survey of analysts. But Of course, Asian markets, they ended the day mostly positive, but really what should we make of the latest showing, along with the latest retail sales and factory output numbers out of China?
I have good news and bad news for you, Tian Tian. First, the good news. Economic growth actually defined tariff swings to come in actually they were quite robust numbers. It was actually higher than consensus expectations of about 5.1%. So we did see growth being supported by exports, specifically to non-U.S. markets. A lot of MNCs pivoted to relying on a lot of ASEAN countries and factories to serve the U.S. market because this 90-day pause of Trump's Liberation Day tariffs. And a lot of the Chinese exports actually went into ASEAN. Now, going forward, we are taking into account, that you might actually have a slowdown in exports and consumption in China. So we are forecasting GDP growth to come in at about 4.2% for the second half of this year and around 4.8% for the full year. Now, this is still an upgrade from what we had at the beginning of this year of about 4.6%. Now, for the bad news, despite the strong headline numbers, the economy-wide deflation actually deepened to about minus 1.3%. Now, this is actually the sharpest fall that we have seen since the global financial crisis back in third quarter of 2009. Nominal GDP came in about 2.5-year low at around 3.9%, implying that there already is significant pressure on corporate profits and wages. Remember that profits are calculated on nominal terms. So entrenched deflation will actually increase borrowing costs on real terms and also weigh heavily on highly indebted companies. Exports of cut-price goods are something that we are worried about, China flooding markets with low-price goods. That may actually contribute to trade tensions as well, especially at a time when Beijing is trying to build alliances. So we'll still need to keep a very close eye on China's trajectory from here.
And further away, Thilan, let's round off the conversation by talking about Nvidia. Now, the AI chip darling said it plans to resume sales of its H20 artificial intelligence chip to China days after CEO Jensen Huang, who is also visiting Beijing, by the way, met up with U.S. President Donald Trump. How far is this a reason for investors to be optimistic, and really what are the levels to watch for Nvidia?
So this is good news for Nvidia and the overall semiconductor supply chain. China is a huge customer of Nvidia, and the company has had to tread this very delicate, line between the U.S. and China so far. It is good that they have gotten this green light to sell the less advanced HTO chips. These chips are very specifically designed to comply with the earlier chip curves that the U.S. had for China. And it's very clear that China still wants these chips, and the U.S. seems to have concluded that they don't threaten national security in the U.S. For Nvidia, they will be able to restore orders that have been written off as lost due to earlier restrictions, which should actually see some earnings upgrades. But I also think it'll benefit the wider ecosystem as well, including Chinese firms, which depend on Nvidia chips to train their own AIs, like Alibaba as well.
I see. I do think that, if I'm not wrong, the semiconductor equipment makers, they're getting a lift as well on the back of the news. So lots to watch as always in the coming days. Thanks so much for the insights, Thilan. That was Thilan Wickramasinghe, Head of Equity Research at Maybank Securities. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.